Hey guys, welcome back. In today's video, we are talking about how the shorts are hedging, the bidding war, liquidity drying up, and many more in this video. First, we're taking a look at this. In case you haven't figured out this move by Goldman Sachs yet, on Jan 20th, Trump enters office. Trump's DJT and Elon's Tesla were/are also shorted mercilessly, just like AMC. A real possibility short selling may be banned. Goldman Sachs is hedging for this very real possibility. So obviously there's a lot of things that is coming up. We understand that Trump's going to office. We understand that Gary Gensler is stepping away from the SEC, and we're going to have someone new who very likely are going to be someone who's extremely against short, and more specifically the naked short selling, the illegal short selling that manipulates the price of a stock. Because we know that whether it's for DJT, for Tesla, or for AMC and GME, these are all stocks that should have seen real price discovery, but couldn't because of the short selling. Now, one of the things we've talked about in the past is how shorts are obviously trying to hedge for the squeeze. We talked about how Citadel was buying into AMC. We talked about how Credit Suisse, Swiss Bank, UBS, they are all buying into AMC because they're obviously worried about what's to happen. We know that they are in billions of short positions with AMC. The only way that would potentially save them, or at the very minimum try and recoup some of the losses, will obviously be long AMC as well, as that would hedge their position. And so what we're seeing right now is obviously something of the sort where we are seeing how shorts are trying to hedge their positions again, this time obviously with a different method and also on a bigger scale. But the very fact that if they are trying to hedge for these positions, understand that is because they understand how impactful the squeeze of AMC will be. And you can see here, so AMG management, so AMC has never done this before. If it would be bad, they could have just done a normal ATM. I believe they agreed with one short seller to throw the other shorts under the bus, let one cover and go long and trigger the MOAS. This is absolutely beautiful. So this is something that we've discussed in the past. Now, like I said, these are things that we are seeing where it's finally coming into the realms of possible, where we're seeing these things actually being executed. We previously covered in terms of understanding how short sellers are actually not friendly with each other. More often than not, they are actually enemies of one another. And to understand this situation, especially with these institutions, they understand that they don't want to be the ones that are ending up in hundreds of billions of dollars of losses. And so for them, or for some short sellers, it may be smart for the first one to get out. Does this mean all short sellers are going to get out? Of course, that's not the case. But if one short seller were to get out, obviously they don't have to deal with the whole squeeze. But if they do that, obviously what we will see is, of course, the squeeze of AMC to happen. Now, the reason why I say just because one shorter get out doesn't mean all short sellers will get out is because we know that the 50 million shares here will equate to nothing when you can take into consideration how many millions, hundreds of millions and billions of shares have been created of AMC. And so whilst we are seeing 50 million shares being sold off, it doesn't mean that all short sellers will get out, because we already know that there are billions of AMC shares that have been created and shorted. And what it could do is obviously potentially get a mid-sized short seller to potentially get out of this, so they don't have to lose billions of dollars. Because anyone who, again, we're not even talking about the bigger short sellers like Citadel, like Virtue, Credit Suisse, UBS, etc., etc. We're talking about people with only kind of a medium position on this. Even those who have to pay, $10,000 for one share of AMC, you can obviously see how dangerous that could be for these short sellers. And that's why one of them will obviously want to get out. And you can see, thanks, many have said, when shares, collateral, and liquidity dry up enough, the hedge funds will turn on each other and screw each other over. Thinking we are real close to that tipping point with AMC, the last hedge funds out will be the ones holding the bag looking for billions of AMC shares. And this is to what we talked about earlier, and it's understanding how they will obviously turn on each other. We have seen how, institutions, especially in finance, how these short sellers will obviously turn on one another. And so what we are seeing right now could be kind of the showcasing of that. And that's exactly what we want to see. We want to see them fight each other. One of the things that they've done throughout all these years is to obviously try and get retail to turn against one another. We've seen all these news articles talking about how you shouldn't trust the management, how you shouldn't trust another retail, how you should only really follow the media article, the institutions, etc., etc. These are things that we have seen in the past, and that's because they want us to turn against each other. So we understand that how deadly this could be if we were to turn against one each other. Now imagine if the short sellers who are going to be turning against one another. And remember, when they sell their positions, it's only going to increase the price, which will cause more people to obviously sell their positions. And you can see how that snowballs into a short squeeze for AMC. And again, the last hedge funds out will be the ones holding the bags looking for billions of AMC shares. And the key emphasis is obviously billions. And it's why we've talked about the 50 million shares won't have that effect of bailing out all the short sellers when they have billions of AMC shares that are existing out there. That's exactly why we understand kind of the scale of this whole situation and understand how shorts can't get out of this easily and why they are worried. And you can see AMC stock falls after exhibitor reveals plan to sell up to 50 million shares, investor fume on social media, where we're seeing this. And now what we're seeing is from Matt Kohrs, firstly saying we have a YouTuber of 143 million followers on X, entirely untrue. But what we're seeing right now is, again, the people who are exactly what I said, trying to get you turned against one another. What we have to understand is that no one is perfect. There will be good decisions made, there will be bad decisions made. Now, in my opinion, I've talked about this. This 50 million shares, in my opinion, is a good decision made. However, there will always be people who are trying to create, these turmoil, these arguments, the drama. You can understand that this could be a bad decision, and that's, again, your opinion just like it's mine. What we have to understand is that at the end of the day, we are all in AMC for one thing, for the squeeze of AMC. And so whilst we will see some stuff differently, it doesn't mean we turn against one another. But unlike what we are seeing right now, that's what they want you to do. And remember, the reason why they want you to turn against one another is because they want you to sell your shares of AMC. Furthermore, you can see Bigham. For everyone crying about dilution, I've been playing the market and leaning in the meantime. I've been putting profits back into AMC at lower prices. AMC has a cash problem again. If you're shocked you diluted, you're not paying attention to the fundamental side. These same people whine about fundamentals don't matter. Fix fundamentals, fix dilutions. Now, if you're a real ape, you don't give a shit about dilution because guess what? AA can't dilute enough for them to cover what's in the derivatives bomb attached to AMC. Or did we forget banks have over 615 billion shares sold, not yet purchased? How much is AMC alone? Did you forget the GameStop report? AMC was way more overexposed and was never covered. So either believe in the process or how to learn to trade in the meantime and stop whining at those buying more shares from profit. I believe AMC is the holy grail, that it just takes time to find it. So this is what we talked about. You can believe, you can understand it, you can like it or not. At the end of the day, what we are doing is improving the fundamentals. Yes, dilution brings, kind of bad impacts, and we've seen how the price is obviously reacting to that. But when we understand that the dilution is to raise cash, which would then improve AMC, which would pay off the debt, which could trigger the dividends, these are all good things, but that's something that will happen in the future. And so if you're focused on the short-term impact of AMC and not the long-term impact, then I don't know how you've been in this whole play for the last 3-4 years. This has always been a long-term play, and that's exactly what we are seeing right now. And again, like we talked about, 615 billion shares sold, not yet purchased. AMC was way more overexposed. 50 million shares will not be enough for the derivative bomb attached to AMC. These are all things that we have to understand. Yes, derivative sometimes is a bad thing. Yes, by diluting the shares and selling 50 million shares could allow some people to cover. But when you have to understand the whole grand scheme of things, of understanding that there are billions of short AMC shares, 50 million is a drop to the water, a drop to the ocean as we see it right now. And that's what my main focus is. As always, now this is every financial advice, so do take our secret of soul. Make sure you do your own due diligence and research. And you can also remember, in 2021, AMC announced the offering, and 2 days later it was done. It was January 27th. We all remember January 27th of 2021. And this is kind of looking back at past offering. Now, again, we're using past data. We're not going to say this is going to be exactly the same, but we understand how, what is done in the past and what that implication was, what that was reflecting. And we could be saying the same thing right now. Essentially, we are offering shares, and we are offering shares to see if the shorts will buy. And if they do buy, we then understand that, again, they are trapped in this play, and that they are trapped in this play for so long that the positions has been accumulated to a number we can't even possibly fathom. And you can see AA closed the 50 million share deal like it's supposed to on AMC. Now that high interest debt goes away, making AMC more profitable in the long run, taking away that high interest payment that was eating into profits and didn't affect the stock that much. Again, long-term perspective. And it's what we always focus on, and it's what we have to focus on when we are investing. It's the long-term play. And the very fact that high interest debt goes away, that we can become more profitable, that we can pay off the debt, that we have more free cash. Remember, if we do have more free cash, we won't see dilution. And so for those of you who dislike dilution and don't want dilution again in the future, the dilution now is to prevent more and more dilution in the future. And that's the important factor. Anyway, guys, thanks for watching the video. I'll catch you guys next time.